Hello, my YouTube friends. Happy Sunday. I hope everybody's doing well. Today I'm going to talk about the things that I'm preparing for tomorrow's opening trades, as well as the stock that I still see as a bargain currently. So stick around. It should be a very good video. Well, happy Sunday. I hope everybody's doing well. If I didn't say it, hello. I'll put up my little thingy there. So, today I'm going to talk about the trades that I'm preparing for and what I'm looking at in terms of tomorrow's trade on the open. I had a bunch of options expire, so I'm looking at the underlying securities and if there are new puts or calls that I actually want to sell going into the open. Now, I do my research and I prepare, but the reality is the market's going to open wherever the market's going to open tomorrow. So things will change based on where things are. So for example, if I'm preparing to sell a put or two and the underlying security opens up way higher, either the strike price or I'll end up changing it completely and maybe not putting on the trade and potentially rotating into selling a call. I had a bunch of calls get called on the Friday's close. The market seems to be beginning to go parabolic. Quite honestly, right now feels like 1997, potentially even 1998, going into how we went into that dot-com bubble in the 2000. I don't know that I'm correct on that, but I've mentioned it in other videos that it's kind of what I'm looking for and hoping to be aware of if it comes through, and that's the type of trade opportunity it creates. It would be healthier for the market if things slow down and we have corrections and bouncing around and it doesn't go up so quickly. But I feel like the optimism is beginning to kick in. It hasn't gotten euphoric. It hasn't drawn in people who aren't typically in the markets. If you get to that point, that's where I'd be really cautious, where things have disconnected from real valuations versus just being a little overpriced. Like, I think the analysts are correct. The PEs are running high, but I don't think we're out of the realm of where we should be, and maybe it's just a little bit overextended. If we get to the point that it draws in the public and we're getting people investing and just over optimistic, where it totally makes no sense in terms of the valuations versus what stocks are actually should be worth, quote unquote, I think you'll see a scenario where a lot of people are talking about probably AI this time, but their new AI company that they're buying into, there'll probably be a lot of IPOs that shoot up a whole bit. But don't forget when that happened in the dot-com bubble, a lot of those companies went out of business. So I would be really cautious moving forward about what you're invested in. And if that type of scenario happens, be cautious because it brings down everything. Now, the reality is from 1997 or 1998, the market more than doubled in that time frame. So if I'm correct and if that's what we're moving into, we should have a really big boom going into the correction. But the correction from 2000 was monstrous. The NASDAQ fell more than 80%, so that's why I say to be careful. You don't want to miss the opportunity on the upside, though, so you kind of just need to keep an eye and watch carefully. So, Sundays are my days to kind of go through everything, see where things closed on Friday, and decide what I want to do for the following day when the market opens tomorrow. I went over Soundhound with my son. He's decided, at least based on where things close, that he wants to sell a 17.5 call. And then my advice to him was, if a stock starts going higher, I wouldn't chase it on the put side too aggressively. Last week we sold 4 puts. This week we're only going to sell 1 or 2. And the reason for that is if we aren't in 1997 or 1998, and we're not going parabolic, and it's a normal market, stocks tend to go up and down. So I don't like to chase on the put side too aggressively and chase the price up, where eventually when it reverses and goes back down into the range it's trading, that you get taken on all of those puts at higher prices than you originally started at. So when we talked about it, I mean, of course, he's going to agree a little. It's my son. But we decided that we're only going to sell either 1 or 2 puts in Soundhound instead of all 4. We actually are also going to expand and we're going to sell 1 put in Open Door as well. I've chosen these stocks on purpose for the account that I opened with him because the stock prices are low. That does not mean it's necessarily cheap. I don't want people confusing that stuff. Market cap and price to earnings is much more important than the actual price of the ticker that's trading at. But if he's limited on funds in the account, it becomes difficult to trade options because they're each 100 shares of the underlying security. So if I choose something like Amazon, he can't even afford to do it because the account is too small. Whereas Open Door closed last week at $9.50. The volatility has gone through the roof since the investor, I forget his name, who did the purchase on Carvana, as it ran from like $5 a share to 400. He's been buying Open Door. He's been talking about it on Reddit. It's gotten very public, and it's driven the stock from under $1 a share to $9.50. It's also pushed the volatility through the roof. So the options have a lot of premium in it, and it creates an opportunity where he can sell a put and Open Door, collect a decent amount of money without a ton of risk in terms of it getting exercised and having to take 100 shares. So that's what we're looking at for his account. For my account, I had a lot of options expire in HIMS, but I'm actually trying to be more cautious about position size in general. I recognize when the stock fell down to about $40 a share that having on 1,000 shares and the risk of having 10 puts on top of it was probably more than I was comfortable with. Currently, I still have the 1,000 shares. I am short 6 calls and I'm only short 2 puts. So what I'm allowing myself to do is to sell up to one more call and one more put, anywhere from 1 week out to a month out. I haven't quite decided, but I wrote down a few different options for myself. Pun not intended, although when it came out, I heard it and thought, that was pretty funny. Options on options? Anyway, sorry, I cracked myself up on this stuff. I'm sure you guys are just rolling off your chair laughing hysterically at my jokes that I tell myself. Um, and same with SoFi. I got called on one of the calls. I was short a $28 call on SoFi. I actually sold out of some of the shares as well, so I could look to be more aggressive on puts if it pulls back a little bit. On top of the fact I still have 4 calls that are still within range that could get executed if the stock continues higher over the next few weeks. And I'm short some puts, but the strike prices are so low that I don't think I'll get exercised on them. Now, when I sold the shares, because the stock had gotten up to over $29 a share, I added one $27 put. I'd have to look at where it is on the strike price or the date. I'm sorry, the expiration date. And I also sold a 27.5 put. The nice thing about SoFi is it has over a 50 volatility, which gets a lot of premiums in the options, and I really enjoyed trading it. So I'd like to see how it continues forward. The last one, not really the last. We had a bunch of Conagra options expire, so I'm going to be selling new calls in that. And then I saw a video, and I thought it was really interesting looking at Tesla, and I may consider selling a put in Tesla. Now, I'll put right here, there's 2 different dates that I'm looking at. I'm going to keep my finger there to give me time. The October 10th expiration, and then the October 17th expiration. Now, their earnings are the week after the October 17th expiration, which is why I also looked at the 10th. I like the additional week in terms of time and what I'd be getting paid on the put if I decide to sell it, but I don't want to get too close to the earnings date because what I find is sometimes the stock might really start exponentially moving higher or lower in advance of earnings. And then obviously at earnings, it can really explode. What was nice is when I looked at Tesla, which closed around $425, I could sell a $390 put. And if I remember correctly, you guys can look at when I put that little thing up there. The October 10th was getting about $7 or potentially $8 for the option, and then the October 17th option was getting almost $10. And when I annualize that, that's pretty much 25% return on the option. Now, of course, you have the downside risk if the stock really goes lower and you get crushed on the valuation of Tesla. I just think going into earnings, it probably isn't going to move too much. I think they're going to have monstrous earnings, but I don't want that heard the wrong way because I'm not really sure what that means for how the stock will react. Because the reason I expect them to have monstrous earnings is because the $7,500 tax credit ends at the end of September. Well, that should really boost their quarterly sales. The place was uber busy. It was unbelievable how long it took to talk to somebody. And if you were ordering something, like they were just extremely busy. And my understanding is so were the other car companies in terms of their EV sales. So I would expect Tesla to have really blowout quarter if that's included in those reports. Now, the interesting thing is that it still could have a sell-off even if the earnings are really good, because the people who've done the analytics are going to have some understanding of what sales are looking at after that expires and what they could expect going forward. So even if the quarter has blowout earnings, I'm guessing that's kind of going to be expected. They're going to discuss that those EV credits are going to be taken away and have some guidance as to what they think it's going to look like going forward. Now, I think when those sales really start to fall off, that there's a good percentage chance that you might see that come back in January, and maybe it's even a little bit different than it is currently, but there might be some incentive going forward as well. So I will be looking at potentially selling a Tesla put. I haven't quite decided which one. I am looking at the $390 strike price, I think, and then either of the October 10th or the October 17th. I'm not real sure. Again, depending on where the stock opens up and where the options are trading could change what I end up doing on it. But those are the things I'm looking at for Monday. Now, if you've lasted this long, I did promise I would tell you about the stock that I think is the bargain right now. I am not banging my hands on the table, mainly because it's taken a long time and I've talked about it 100 times. But I'm going back to Target again. Now that it's fallen below $90 a share, they still have great earnings. Their PE is exceptionally low. They make plenty of money to pay what's an over 5% dividend yield. So you're getting really good value currently. I don't know that that necessarily translate into the stock shooting higher anytime soon. There's a lot of negativity. There's concerns about the new CEO. People didn't want to see the same person who's been in the company for such a long time. They were hoping to get new blood into the company and hopefully bring some new something that would give them some direction. But what I'm basing it on is just current valuation and the earnings that they make. The company does just fine. And sometimes that guy who's second in command has some good ideas that he may feel like he hasn't been able to implement because he isn't the guy yet. So hopefully when he gets in, he's able to make some sort of transitions and some changes that start driving the earnings higher, which would then in turn push the prices higher. The one thing that I really do like about Target is every time I talk about it, people love to hate it. They still think of it as woke, or some of them think of it as not woke. They still worry about closures of stores, which, quite frankly, if you're able to close non profitable stores, that is better for the company. They worry about theft, but I think with the closures of the stores that were having those problems, that's probably been offset at this point. And again, I think Target does just fine. It is not my A plus company like I think of like Amazon and Google and Meta and Microsoft and basically the Mag 7 and some ancillary ones that I also might include in that category. I don't put it as that top tier company. So it's not something I just want to own forever. However, I did put it in the set it and forget it account with like a 5-year estimate of how long I expect to own it, because my hope is that I'm getting that 5% dividend and it potentially drifts at 8% higher per year, maybe higher if the earnings start to do really well. At one point, it looked like it was going to, and then it fell off. I think they do miss the boat on some things. When I go there, I don't understand their grocery segment. Even though so basically, I figure Target knows who they're marketing to, right? I don't know. You guys put in the comment. Do you agree with that? I think what happens with Target is they then add a grocery section that is like in between doing what Walmart does and just aiming for the low end, and sort of like they're competing with almost like Whole Foods. From my perspective, their prices are really expensive. It's a very small area, so it seems like it's more for convenience than anything else. They do have a lot of freezer space, but they have very few vegetables and very few fruit and very few meats, and they don't look all that wonderful. And then the price is super expensive. Now they carry all the chips and all the peanuts and all the other stuff like that, and that stuff's somewhat reasonable. But if you want to pick up some chicken, Target is like the last place I would consider doing it. So I think they're missing the boat on their grocery section, and I almost think they'd be better served to just get rid of it or improve it, either one. At least not be in this zone of not knowing your target base and what you're going after. On the other end, Target's a nicer place to shop at to me instead of Walmart. I also think that they're going to eventually compete with Amazon and Walmart in terms of allowing stores. And what I mean by stores is their online presence, that if somebody sells widgets or lipstick or whatever it is, that they'll allow them to market it on Target.com and then have some pass through where they're managing the logistics of it, or they'll have a logistics company to do it. I'm guessing they're still working on it, and that is just a guess of mine. But I think that'll help improve sales because I don't understand why Walmart just doesn't sell the products themselves. But obviously, something about how much money they have to put out to carry inventory versus selling it themselves, they figure they're better off letting other people. And having Walmart stores and Amazon stores, it's more profitable to them to just manage the logistics and take a percentage of the sales. Interesting concept. I just wouldn't have thought it would work that way. So Target is the one I think is the biggest bargain in the market right now. I do think that PayPal is beginning to look attractive, and that's just as a trader and what I've seen over the years more than doing a deep dive into the company. Primarily, it fell from approximately $200 a share down to in the 50s, and now it's been sitting in the mid 60s for 2 years. That's long enough that I find if the company starts doing a little bit better, the people have been shaken out who just thought it was going to be the next greatest thing. And if they start doing decently on their earnings and guidance moving forward, even if things just normalize, they don't have to be anything incredible. They've shaken enough of people out who are tired of holding it, tired of sitting around. I'm guessing anybody who's wanted to sell it has probably sold it over the past few years. So you'll just slowly see it start to drift higher. Again, I haven't done a deep dive into PayPal. I just like how long it's been sitting in this range because if things aren't that bad, well, that's when they tend to start drifting higher. And the longer a company makes a base, the longer the up move typically is. The other thing I like about PayPal is when I go shopping online recently, it seems to pop up a lot more often than it used to. And my understanding is if you use PayPal checkout, the the stores, I'm getting a brain fart as to what the word I'm looking for is, but the online retailers that are using that portal for transaction are finding that they're doing 10% more in sales when people are using PayPal than when they're not. So they must see some value in making that platform available on their sites because I'm guessing they're seeing better sales instead of trying to use their own system. So I think that could be really strong for PayPal. And I think we could see it start to drift higher. And if you do, look out. It could just go for the next 3 to 5 years. Like that's my time frame on a company like PayPal. Anyway, I hope everybody's having a great Sunday. I hope this week goes wonderful for everyone. I will update you guys when I update Jacob about which options we sold for his account, how much money we collected. We crushed it the first week. I mean, he made over $500 in a $10,000 account, which annualized is just absurd. I tried to prepare him that that is not typical, but I was really glad it happened because my underlying goal is to get him interested in investing. I don't want him to become a trader. He wants to be a lawyer, and that's great by me. But I want him to have some financial understanding and be invested in learning about investing so that when he gets to the age that he wants to invest, he isn't in a position where somebody who can just take advantage of them. I find that most salespeople, whether it's in brokerage firms or real estate or even mortgage or whatever else, a lot of them don't always understand even the product that they're selling. They're not trying to do anything wrong, they're just doing their job. But some of them are not well versed in what they sell and they're just trusting what their company tells them to go out and do. And maybe it's not the best advice, maybe it is, but I think better to have a good understanding of finances before somebody makes a mistake on your investments. Anyway, as always, if you haven't already, do me a favor and hit that thumbs up button, hit that subscribe button, smash the thumbs up button, make some comments, let me know how your week was. Let me know how your weekend was. And hopefully, this week is a wonderful market and we just keep going and going. Have a great day. Bye bye.